Hello everyone, welcome back to my channel. So today is Saturday, July the 18th, and this has been another bad week for metals, especially in the wake of what has been going on here in the Middle East with the conflict between the US and Iran, and not even very favorable data on the inflation front was able to unabated the plummeting of metals. Looking at here at the economic data that came out, and yeah, here it is. We have already touched upon what happened with the CPI in the previous video, so I'm not going to spend too much time on this. But looking at the PPI, which is considered to be a precursor of then what's happening with the consumer prices, you can see here that on a headline perspective, the data came pretty favorable because on a monthly basis, inflation came down 0.3, and on a yearly basis, it also came down. There was no expected value here for the whole year, but it came down quite a bit. And then looking from a core perspective, discounting the energy and food prices, as you can imagine, when you take those out, it takes a little bit more time to adjust because the energy prices take some time to ripple their effects over into the rest of the goods and services, and so that's why the change was much smaller. You see here, on a monthly basis, the change was still significant, although it still grew a bit, but here remained pretty much the same as in the previous quarter. But of course, given the drop in energy prices that occurred here over the past month, keeping in mind that we are covering here the month of June, this has the reflection on what you see over here on a month-of-month basis. And so even though this was a quite positive data, the events that have been going on the war front, and the fact that the strikes have been intensifying on both ends, by both parties, has meant that metals have been taking a hit. And here you see that now gold is now below 4,000. So the so-called psychological barrier or support that was assumed to exist around the $4,000 mark has now been broken, and of course it's still relatively close, and chances are it may revert, but at this point in time the barrier has been broken, and we'll have to see if it remains that way or if there will be a rebound. Maybe the rebound is still possible because this week was quite negative for metals. You see here also that silver has plunged way below the $60 mark that we are used to see over the past couple of days. And so as things are, the chance of a rebound of course exists, but given the fact that we are now seeing a rebound here in oil prices, and coupled with the fact that looking here at the rest of the data for the remainder of the week, the fact that we have less than expected jobless claims, the fact that we have still the import prices continue to increase in June despite the oil prices have been come down, and the fact that we still now we have a consumer sentiment, even though it's a preliminary reading, but we still have a consumer sentiment that, even though it was negative, or there was a contraction because the reading was below 50, and now we have one above 50, which means that it is improving. This basically means that things are showing a positive turn in the US economy, and so there is more of a reason to increase interest rates, and that of course will bring another hit to metals. So for the time being, this is where we stand on the economic front. In terms of the trades themselves, and I will get to total amount of losses that we are carrying at the moment, but given the fact that we had these losses, the prices of metals have come down, we indeed have made some progress, because now, as you see here, we managed to buy some more shares. We bought here 500 more shares at 24 of the junior miners for silver, and we also bought 200 shares at 24.50, and I believe this is all we bought for the SILJ. These puts, that was a put, yeah, these three puts expire worthless at this point. We at the beginning of the section on Friday, yesterday, all of our puts were in the money, but because metals reversed and improved somewhat relative to the previous day, some of the puts ended up finishing the week out of the money, and so that is why some of them expired without value. Also, we bought 100 shares here of the GDXJ, the junior miners for gold. We bought it at 96. We will see that we bought some more shares of the GDXJ on our UAE account, but I will show that in a moment. And I think, yeah, and we bought also 100 more shares on the SLV, and at 53. It's a pity because we spent quite a lot of time selling puts at 52 and even around 51. There was once I think we sold at 51, and now that we rolled up for 53, the price immediately came down, and we could have sold the put at a much lower strike. But yeah, we could not predict that this would happen. Also, we sold these 8 calls for the IAU, which is the gold trust. So this is the ETF that is really based on gold. The underlying asset is gold. But here you see that we had to sell with more than 1 month of maturity, basically because the option chain of this ETF is much shallower, and so the strike price that we were looking for, which was 84.5, was simply not available until we stretched the maturity this much. And it was either, when we got to this maturity, it was either the 84 or 85, so we had to go for the 85 strike price. It goes without saying that all our calls that were due to expire this week expired with no value, and this is the way we are. I already added here in our calculator here this number. We are going to see, because we were assigned also some shares on our UAE account, we also have to account for the losses that may come up in there, and there are at the moment, of course, because we bought the shares at a higher price at the current price, so we are already carrying some losses in there, but those will be accounted for in our let's just say on our scorecard for the losses. And now for the next week, and I can show already here, right, so here for the SILJ, we managed to get our cost basis down to 26. So for next week, we're going to sell 10 calls using these 1,000 shares as an underlying for a 26 strike price. I think this is quite encouraging, because being able to bring down the cost value to 26, this means that we are reasonably close to this target price. And also because, as you can see here, the beating was very large. Let's see the chart, not the option chain, but the chart. You can see here that, let's just go for the weekly chart. You see here that this ETF took quite a beating over this week, And so chances are, looking here, we are looking at around here. So there was a point in time in which I believe we were, yeah. So this is July, yeah. So basically we have our cost basis around here. So well, we need of course some improvement to happen on the front of the war, but I think this is much more feasible for these calls to be exercised and finishing in the money. And so I believe that on the balance of probabilities, this will be the first ETF that we will probably be able to get rid of. And so keeping my fingers crossed for the calls at 26 strike price to be exercised sooner rather than later. If we look here at the option chain, and this is for now for next week, you see that we will still be able to collect some premium, so chances are this can happen. Of course, we will not be negotiating at these prices because this is the market is closed. But if there is a rebound after such a negative week, and usually that's what happened, we will be able to sell these calls at a relatively good premium, and who knows, maybe getting rid of them probably in the next couple of weeks, but we'll see. Now, we also managed to bring our cost basis down a bit for the SLV. It's now at 68.56. Assuming, of course, the amount, the capital gain that we want to get, we will have to sell, I think, the calls at around 74, if I'm not mistaken. I think this is the case. Yes, this is exactly the case. We would have to sell, yeah, the calculation is already here, so we would have to sell 74. Or if we want to just forget about having this gain and just breaking even, we'll probably have to go for the 69 here and see what happens. Now, I think this is, yeah, on this side, it's pretty much all. The GDX and the GDXJ, we bought the shares. We bought, as you can see, 100 shares on this account. Yes, so yeah, we bought 100 shares in this account. Now let's see what has happened in our Emirati account. So here we are, and just to get this out of the way, we are currently having a $1,300 loss, and keep in mind this is in dollars. So if we look here, and let's just use here, I believe the number was 115.82, so 115.82. So we have 132,504. So if we add this 132,504 plus the 1,300 that we have in here, so we are carrying a loss of $133,800, right? And so we bought 200 shares here of GDX. One of those was bought at 96. 100 of those were bought at 96. All right, for some reason this is not showing. All right, it's not a problem. I can guide you through because I already collected this information and put it in on our scoreboard. So looking here, let's see what it is. And we managed to buy 100 shares, as I mentioned, at 96, and we bought 200 of those, and these are the two ones. We bought 100 of those also at 96 and another one's at 97. These two are in our Emirati account. This one is in our European account. So now with this, with these 300 more shares, you see here in our formula that now we managed to bring our cost basis, because also cost basis was around 121.57, and now with these shares we managed to bring our costs down to 114, right? And as a result of this, next week we will be able to sell 10 calls at this strike price. Now, whether we will get a nice premium or not, we will have to wait and see. But looking here, and keep in mind we're going to have to split these calls across the two accounts, so this is an extra complication that we have. But let's see here if something shows up. No, we don't have it. No, we don't. And so now probably we'll have to extend this to 2 weeks. Let's see. Of course, we are dealing with not with market data, but at the moment it's not even showing for the 114. We'll see if we will be able to get a rebound for next week and get some additional price here, but yeah, at the moment we don't know. For the GDX, these 200 shares were also bought. Let's see here, GDX. So yeah, these were the ones that we bought. We bought ones at 73 and 74. That was also the chance. At some point, the GDX price came down to 69 point something, if I'm not mistaken. Let's see what it is. Yeah. So there was a point in time. See here. Yeah, you see, there was a point in time in which the price dipped below 70, and as a result of that, here this put that we sold was in the money, or no, not this one, because this one was closed, sorry, this one at 71, and this one also 71. So this one and this one, the 71 puts, were temporarily in the money, but because then prices recovered before the end of the session, here you see the daily chart, yeah, the price went dipped below 70, but then it recovered. And even though here there was a chance that these options would also finish in the money, it ended up not be the case. The price recovered, and so those two puts at 71 ended up out of the money and expired worthless. Otherwise, we would have collected 200 more shares, and this would have brought our cost basis even lower. I think the cost basis would have been around 112, something like that, but that ended up not being the case. And so now we are dealing with I'm sorry, this is I'm switching between the GDX and the GDXJ. The price now is it's 85.5 because of the 100 shares we bought 74 and the 100 shares we bought 73. With the 71, if these two puts would have been assigned, we would have brought our cost basis by around 84 or 83 and a half, if I'm not mistaken, but whatever, that is no longer the case. And now, if you notice what happened in our European account, I still have two puts left expiring next week. One of those with a strike price 23.5 and another one with a strike price of 22. And so if these are assigned, we will continue to bring down our cost basis. We will have to devote some more money, probably to the 23.5 in order to bring down this cost basis, because between 26 and 25.77 does not make any sense at all. So yeah, we'll have to do something about this. For now, for next week, we will try to sell the GDX calls, the six calls that we will be able to sell. We will try to sell at 85.5 if that is not available, but actually, yeah, the price is there, but the calls here are not available. We don't know if there will be a premium price over there, but we'll see here if the option chain cooperates. All right, so this would have to be at an 86. So yeah, things, we will have to go from there and see what's going to happen. Now for the because we still have here $7,800, and we also have, if you recall, about 12,000 euros in our account, European account. The focus for next week will be to, I would say most likely we'll continue to try to, well, first of all, we need to do some more selling of puts for the SILJ. I think this is probably the closest one of being exercised, but we need to take care of this. We cannot stay with this at 25.57. If we add another put here, probably it will not be enough, but if we add 3 more of these here, probably that will be good enough, and in fact it is. So chances are we are going to use some of those 12,000 euros to sell 3 more puts here at 23.5, right? And for the rest of the cash, I was thinking that probably our best bet is to continue to bring down the cost basis of the GDX, because the GDXJ is already 10 contracts, so 1,000 shares, so it's going to be a little bit more difficult to move the needle on this one. But this one, maybe it's still possible, because it's only 6 contracts and we are here at 85.50, so, and the prices are quite depressed, so we are going to split our attention between the GDX and the GDXJ, but again, putting a little bit more focus on the GDX. For the SLV, the prices will hardly, selling more puts will hardly move this cost basis. Probably we'll try to get some another one more, because if we do that, and copying in here, if we bring, for example, let's just say, for example, here plus 50, because the price is close to 50, times 100, and we bring this down to here, at least we'll bring it back below 68.50, so this will probably be enough, but we'll see. For the time being, this is all. Fingers crossed for next week, and feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions. And as always, feel free to like the video and subscribe to the channel, and we will reconvene next week to see what is happening in the market. And yeah, I'll see you there.